Good afternoon and welcome to the latest edition of the WMC APAC WealthTech Talks, an ongoing series of webinars with industry participants on the many and evolving topics related to technology in and around the wealth management industry. Today, we are focused on the keys to success Greater Bay Area Wealth Management Connect. My name is Mario Bassi, and I'm leading the business development efforts in APAC for the WealthMosaic, directory first, research-led and focused on wealth management curated online marketplace. Now, let's look at the Greater Bay Area. It's just amazing. It covers an area over 72 million people with, I guess the number keeps growing the way as we're speaking, $1.6 trillion economy, and HSBC even expects that the economy reach 4.6 trillion by 2030. Amazing. The idea behind the Greater Bay Area plan is to capitalize on the region's impressive infrastructure and expertise in finance, manufacturing, and technology by dropping trade barriers, promoting cross-border business, and eventually creating a single market. Now, Wealth Connect is the latest in a series of innovative schemes that connect mainland Chinese investors with international investment opportunities via Hong Kong. The earlier Shanghai and Shenzhen Connect scheme, as well as Bond Connect, are primarily driven by institutional investors, whereas Wealth Connect is exclusively for retail investors. Joining me today to talk through the topic are Marina May, Senior Consultant, Regulatory Compliance and Risk, and Greater Bay Subject Matter Expert at Simpulse. As well from Simpulse, we have Andreas Mittenberger, Director, Head of Business Innovation and Growth. And last but not least, we have Thomas Tse, Director, Client Solution Greater China at InvestCloud. May I ask the panel to introduce themselves shortly in a few words? So, ladies first, Marina.
Hello, guys. I'm the senior consultant from Simpulse Management Consulting, and so my expertise is the regulatory and compliance. Actually, as a mainlander myself, my passion is always within the regulatory aspects in Hong Kong and in mainland China, of course. And this topic is quite into my heart. I'm happy to share my insight with you guys in this session.
Thanks a lot, Marina. So let's, Andreas.
Hi, everyone. Thanks for joining us today. Yes, my name is Andreas, responsible for business innovation and growth at Simpulse Management Consulting. I have been mainly supporting the banks here in Hong Kong, as well as North Asia overall in the past few years on digital transformation, as well as getting their operating models and business models ready for new and emerging market trends.
Wonderful. Thanks, Andreas. Thomas, last but not least.
Hey, I'm Thomas. I look after client solution for Greater China market at InvestCloud. InvestCloud, we're a digital design agency with a strong focus in customer experience. But the interesting thing is we're also a digital wealth platform, also with a very strong focus in providing the best digital solution for wealth managers. A little bit about myself. I'm originally from Hong Kong. Started off as a banker and investment advisors, and then moved into fintech consulting and sales. And in the past 15 years, I've been really focusing around working with institution clients in Asia and Greater China to design and implement innovative fintech solutions. And the Greater Bay is actually also similar to Marina. It's fit to my heart because it's a great opportunity, I think, for Hong Kong and also for Greater China. In terms of wealth management business and how we actually grow together as a whole. Look forward to the conversations that we're going to have in the meeting.
Thanks a lot, Thomas. So you see a very well-chosen panel with a lot of passion. That's great. So over the next 45 minutes, we like to cover the topic, which is gigantic, but we'd like to cover it in three parts. we start off with setting the scene with some insight on the GBA and the Wealth Management Connect, then dig a little bit deeper into the digital journey. And last but not least, we take a little bit of a crystal ball and see and look what's happened going forward. As we would like to involve you as well, you should have at the site or wherever your screen is, you should have a little question mark where you can submit questions. And these questions, we will kind of reserve the last 10 minutes to address as many of these questions as we can. And yeah, so please, as we are speaking, just send the question through and we try to answer them as good as we can. Now let's get started. Thomas, can you share with us a general introduction of the Greater Bay Area in the sense like wealth of population, investing needs with a few figures and facts?
Sure. There are actually some incredible numbers from the GBA, and I think what makes GBA one opportunity for Hong Kong institutions as well as Greater Bay Area institutions is really a one in a lifetime or in many decades opportunities. GBA is made up of 9 cities in Guangdong province plus 2 special administrative regions, which includes Hong Kong and Macau. Some of you may not know, but GBA is actually also called Guangdong, Hong Kong, Macau, Greater Bay. And the population-wise, right, it's the largest and the most populated urban area, and also the 4th largest Bay Area in the world when we put everything together. Estimated total population in the GBA, we're looking at about 72 million people with more than 400 billion US of investable assets. And some figures from recent reports since the sort of official launch of the GBA. Many of the news media and also other consulting firms have come up with some really good numbers. I'll give you a few. Forbes came out with the numbers that 4 of the top 10 richest people in China lives in the GBA. And Deloitte and CPA Australia, they estimated there's 450,000 high net worth family with more than 6 million yuan in investable assets across Hong Kong, Macau, and also in the Guangdong area. And then if you look at this makes it the GBA the world's wealthiest region for us to kind of go after with this opportunity. And then later on, when we start looking at potentially what is the Wealth Connect is about, then I'll tell you a little bit about sort of where we're sitting today in terms of what we're allowed to do versus what we can potentially do later. And then also there's another interesting report from Oliver Wyman. They say that 66% of the GBA investors in China are very interested in investing in foreign investment products.
Thanks a lot, Thomas. Quite amazing numbers. And in China, the numbers always growing, right? They always get bigger the moment we speak. So furthermore, can you also give us some further introduction of Wealth Management Connect, especially including the latest announcement of Hong Kong MA, please?
Sure. The Wealth Management Connect now is actually you could say it's a pilot scheme. And actually any institutions in Hong Kong with a retail business, retail banking business, private banking business, as well as, let's say, SFC Type 1 license, they can establish a Wealth Management Connect business in Hong Kong. And the scheme basically would allow residents living in Hong Kong, Macau, and the 9 cities across Guangdong province to basically invest in wealth management products distributed by the bank in the Greater Bay Area. And these products, according to the recent announcement, to start as a pilot is basically very simple and in around low to medium risk. And they can mainly just do it on execution only. So there's actually no advisories at the moment. And then another thing to look at is because they involve China and also involve China and Macau, the 2 special, Macau and Hong Kong, and the 2 special administrative regions. We're actually also looking at a southbound flow and also a northbound flow. And the total aggregated quota that the regulator have put up forth is RMB 150 billion in each direction. But each individual investors can only invest about 1 million RMB at this moment. And if you look at the northbound, how to differentiate northbound and southbound connect, is the northbound. People often get this kind of confused. But if you look at it, the northbound connect is actually for Hong Kong and Macau residents to invest in wealth management product distributed by mainland banks in the Greater Bay. And the southbound, actually, when we look at it, is actually for residents, mainland cities around the Greater Bay to invest in Hong Kong products. So this is where it gets really interesting for the Hong Kong market and also Hong Kong institutions. And this is where I think there's some figures that sounds really interesting. When we look at the aggregated quota right now is looking at about 150 billion on each direction, right? But if you look at, there's a report that came from Deloitte. Basically, it says 9 mainland cities in the GBA. The average aggregated estimate annual gross savings is roughly around 567 billion US dollars. And then this is actually 4 times more than Hong Kong and Macau estimation. And then if you look at what we're investing now, allowing the quota, this is less than 10% of the gross savings of the GBA. So you could kind of look at and imagine what is the growth potential for Hong Kong banks.
Really amazing. Thanks, Thomas. So the last set for question for you, Thomas, and maybe you can take the mic a little bit closer.
Yeah,
to you, because it's I think it's a bit better. Yeah, perfect.
Okay.
So the last 2 questions, or the last set of questions, how ready are the anticipated participants in the preparation for the launch of WMC? And what kind of general strategic positioning of banks for Greater Bay expansion do you observe, i.e. establishing GBA office, ramping up hires, as well as investing in technology?
Yeah. And when we look at, I think interesting angle to look at this is when you look at the Guangdong area and also Hong Kong Macau area, there are actually more than 200 banks in Guangdong and nearly 240 licensed banks in Hong Kong and Macau, right? And then among them, there's 21 banking groups which has presence throughout the GBA. And then 16 of these groups, they already run wealth management business. So I think for Hong Kong, some of these institutions, they are ready, and I think they've been anticipating and preparing for the launch. So I don't think it'll be too challenging for them to kind of launch for the initial pilot phase. But the challenges come from those banks that who do not have current business in GBA, and also then they will need to start looking for third-party banks. And then also from a technical angle to look at the situation is that the first phase, we're looking at execution only. So sales and transaction processing, which most of the bank in Hong Kong, they already can do for the various products that we can sell. But there's actually one catch we could take some time for them to get ready for the official launch is that there is a sort of capital cross-boundary or cross-border bound capital flow that they need to make sure that when the transactions is done, it's actually done in a closed system. And with this, I think there's still some work to be done before they can actually launch, because this actually has to deal with how the flow is coming through and how it's being converted from renminbi to Hong Kong dollars or vice versa, as well as to ensure that these money is actually invested only for GBA product and within the scheme and does not go outside of anywhere else. And I think another area, as you mentioned, how are some of the banks actually setting up or gearing up to be ready for the GBA expansion, right? If you look at the media and the news, there's many banks have already set up kind of specialized technical GBA office and build up a team to focus really around strategy, planning, and how to execute the GBA area kind of business plan. In terms of physical location, as I mentioned before, there's many banks within the 21 group. They already have existing business in GBA, so it shouldn't be too big of an issue to kind of start and kick off the pilot phase. But then definitely also you could see that there are a lot of activities around their focus in building up or strengthening up their wealth management business offering. So for example, HSBC has 500 retail bankers in the GBA already that's ready to serve the customers. But then think about it, it's 70 million customers with 5,000 retail bankers. And then if you look at Standard Chartered Bank, they actually have invested $40 million US to build a Greater Bay Center in Guangzhou. And the plan for them is actually by year 2023, they want to have about 1,600 staff there servicing the client. And then as well, Citi, they also plan to hire at least 1,000 experts by 2025 in Hong Kong to service this growth coming from the GBA. And then if you look at technology perspective, right, from the conversations that we've been having with some of the local banks or the banks in Hong Kong, I think for the, as I mentioned, for the current phase, I think they'll leverage the existing infrastructure as well as getting the whole remittance piece sorted out and some of the regulations. But then they are looking at new ideas and how to sort of support this kind of massive future growth.
Perfect. Thanks a lot, Thomas. So now I give you a little break and turn now to Marina. What are the regulatory implications along with the launch of WMC? What do those regulatory implication requirements mean for the potential participant from the industry?
Sure. So actually, in a nutshell, why WMC is getting so much attention is that it's more towards the general public, unlike the Stock Connect or the Bond Connect, which have, the very high threshold. Maybe it's more for the institutional investor. This is for general public to get access to the wealth management product across the border. For the southbound, it is for the mainland investor to, get access to the low risk and medium risk products across the border, vice versa. So actually, this is a high a level up to connect the financial market in between mainland China and Hong Kong. And also, we need to dip a little bit further of the operational aspect of the WMC. So in the operation model, both the southbound and the northbound, the currency exchange will happen in Hong Kong. I believe it is the intention to strengthen Hong Kong's position as the RMB offshore hub, from the regulator's perspective. So I think in general, for the institutions in Hong Kong, for example, they need, if they want to participate in this WMC, they need to have a very well-established settlement system within the bank. For example, in terms of risk management, internal control, also like the process and procedure in place to make sure this operating model is working under this cross-border context.
Thanks, Marina. So, Andreas, finally we get to you. Generally, what challenges Hong Kong banks are facing in Hong Kong and potentially in Greater Bay around digital, like client digital engagement preferences and habits?
Yeah, thanks, Mario. So I believe overall, some of the challenges that the banks have faced in the past 12 to 24 months, which were basically inflicted with the COVID crisis. It was exactly around the same topic that are basically now the prerequisites for successfully launching WMC, and that is digital capabilities. So I think looking at the retail segment first, digital capabilities, client onboarding, e-banking capabilities, all of that, it was present for a longer time already for the retail segment. So I think there was never really a big gap in terms of these basic digital capabilities, especially in the e-banking space in Hong Kong. Digital client onboarding, obviously a key driver also for cross-border business, where you may not be able to come to Hong Kong to do a physical account opening. All of these are important factors that banks need to enable. But I think what's become more important is basically the digital engagement model between the banks and customers. So enabling instant messaging capabilities, enabling Zoom advisory capabilities, self-service management basically by clients, where they can do some portfolio construction capabilities in a self-service fashion through e-banking rather than just simple order execution. I think all of this basically got increased relevance during COVID. Markets were more volatile. I think overall nobody expected that after the drop in 2020 in the first quarter, that markets would recover in the way that they did, and that obviously then also led to quite a successful past 12 to 18 months, I think, for banks overall. So net new money plus also the good markets led to increased AUM for the banks. For private banks, now obviously, as Thomas as well as Marina shared earlier, the current scope of WMC is for the affluent segment, so 1 million plus, but with the limitations of transactions, etc. It's not really basically interesting for private banking customers at this stage. But since it is a phased approach, I think it's fair to expect that in phase 2, 3, etc., that firstly the product universe would expand. Secondly, that the limits would be increased or lifted. And thirdly, that also the product scope would change. While at the moment it is really limited to lower risk products, we do expect that it would then become also more interesting for some of the private banking products going forward. So having these platform capabilities also on the private banking side, in terms of digital capabilities, we did see a lot of investment from banks in the past 1 to 2 years. I do believe that banks, universal banks, which also have a retail segment, they have a advantage compared to pure play private banks or banks which have mainly been focusing on ultra high net worth and institutional clients. Because they can leverage some of these platforms across, and they basically have a head start. So nevertheless, interestingly enough, also these banks, which maybe 2 or 3 years ago, if you had asked them whether they would be interested in digitizing their operating model, whether they would be interested in implementing e-trading capabilities for their clients, they would have told you, maybe come back in 5 years. That's not our client segment. That's not their needs. But then 1 to 2 years ago, they actually proactively came back to understand how they should best tackle these challenges.
Thanks a lot, Andreas. As I was expecting, we have a very active audience, so we have already quite a number of questions coming in. So please keep going. And as I said, towards the end, we will address them. So as Andreas has already kind of prepared the pathway to the digital journey, Thomas, next question for you. How the adoption of digitalization can benefit Hong Kong banks in the long run, especially with the launch of the WMC? How technology can help the cross-border account opening process, client engagement, remote services, for example?
Yeah, I think Andreas brought up a couple of good points, right? And I think from the angle of looking at technology and how Hong Kong Bank can benefit from the long run, looking at it because of the WMC, I think there's 2 angles to look at. One is really how they can actually do the transformation for the Hong Kong market, because Hong Kong now becomes part of the WMC. The other one we look at it is how actually can manage this kind of cross-border kind of situation where it's a completely new greenfield potentially, with new customers coming through that have never invested in Hong Kong product, have never done banking in Hong Kong. So as I mentioned before, under the current phase, most of the banks should be okay in terms of digitalizing using technology to manage this initial phase. But as we get more product coming in, as we get more information about how regulatory compliance might come into effect, I think many of the banks really need to look at how technology and digitalization could help them in the long run. I think there's three major areas we focus that they should look at. One is how the enabler of technology, right? how you actually can actually use technology to reduce manual work, drive operation efficiency, reduce costs. A lot of these things we normally would talk about anyway when we look at technologies and how we actually implement it in the financial services kind of arena. The other one is the driver, which I think Andrea actually also mentioned, is how to actually improve the customer experience through digital engagement. For example, maybe using data analytics to understand the customer better, understand their behavior better, to kind of drive a better experience, right? And then the third piece I think is really important to think about is the connector, how to actually leverage digital technology as a connector or let's say integration piece. What I mean is WMC, in the past couple of 20 minutes or so, we've been talking about banks. But actually, the participant within the WMC, we're talking about not only banks, right? But we're talking about product manufacturers, so you can asset managers, distributors, such as like banks, wealth managers, brokerages, and then we also have customers. So how this actually technology can help kind of streamline this whole value chain to make sure that the newest and the latest product information can be disseminated to the customer. How can it be actually launched and be able to allow the customer to purchase and make orders? I think this is very important. I think from the aspect of thinking about how in the long run can use digital to kind of improve the success ratio or success percentage. And when it comes down to a cross-border account opening, I think we're already doing this already in terms of account opening, which would involve a lot of KYC and AML process. But I think the complexity comes in now is when we go cross-border with mainland customer. Even though at the moment, I think the regulators, because of COVID, because the border situation that in Hong Kong is in, they actually have allowed the customers to actually open account at the branches that by visiting branches in the GBA. But at the same time, if you think about it in the long run, there's 70 million prospecting customers that might be interested in buying or investing in Hong Kong product. This is going to be very difficult. And on top of this, it's going to be very difficult to monitor and validate if the process is done correctly. So we should think about considering maybe automating some of the process, leveraging some of sort of ID verification or KYC AML technology to actually be able to support some of these sort of mass customer base and the workload. Yeah.
Perfect. Thanks, Thomas. Andreas, anything to add on the adoption of how the adoption of digitalization can streamline internal processes and transform the banks for business growth and expansion?
Yeah, thanks, Mario. So I think just looking at basically from various studies from consultancies and other organizations, what is really the added value to these potential customers in the Greater Bay Area? I think it is really around front office capabilities and platforms which allow them to make more informed decisions. And I think that is especially important in the context of the first phase being execution only. So upon request of the GBA customers, banks are allowed to distribute CIO content. So they are able to share their macro economic views. They are able to share views on industries, regions, etc. So I think this will be an important differentiator also between banks which are participating in this WMC scheme, that they can basically share their content. They can share how they differentiate themselves in terms of research capabilities. A hygiene factor which is related to execution capabilities, obviously that is a must. So if my trades don't go through, if there's a time lag, that will quickly lead to customers being not satisfied and looking for an alternative with another bank. I do believe that no customer just wants to get bombarded with research content. So I think there's multiple solutions out there which can support smart distribution. So where you link up research content with customers' affinities, trading patterns, historical holdings, that kind of stuff. So I think also such capabilities will be an important differentiator. But I do believe, especially for this offering, the key capabilities and differentiators will be in the front office, functioning platform, and having cool tools available for the GBA clients.
Perfect. Thanks, Andreas. So Marina, back to you. What factors the banks need to consider when designing the WMC operating model that includes adoption of digitalization?
Thanks, Mario. So actually, when we try to design a fit-for-purpose operating model for WMC, the obvious foundation would be to comply with the regulatory requirement, let it be the framework, the procedure, the organizational structure, etc., etc. But one key thing we cannot, overlook is the extension of the WMC in the future. As mentioned before, at the point of time, maybe they will relax a little bit of the threshold to get it up higher so that it will interest more like the private bank clients or the more sophisticated client who would, look into this WMC piece, and also would introduce maybe medium and high risk and complex product in the future. And also not just for the GBA, hopefully one day we can still see it will extend it to the mainland China as a whole, etc., etc. So in terms of the institutions, is the existing operating model flexible, or I would say dynamic enough to adopt this change is crucial. So this is what we should look at, right? Especially maybe not long ago, hopefully soon enough that we would pass the execution no basis. If we introduce advisory or the solicitation into this model, then obviously we need to be equipped with the infrastructure to facilitate this process. For example, the market, the trade surveillance, on the communication in between the frontline staff and the client, etc., etc. So all those elements you need to consider in your design, not just at this stage, but in the future perspective.
Perfect. Thanks, Marina. And just a follow-on question. Is the adoption of technology in line with the regulatory expectation? And are there any key regulatory requirements to be kept in mind?
Sure. So the regulators, let's say Hong Kong side or the mainland side, they are obviously very supportive of the adoption of technology, especially for the cross-border model where the client interaction most likely would not be face-to-face or under this COVID situation, some of us might not be in another side for more than 2 years now. So face-to-face interaction becomes a bit difficult right now. That leaning more towards the digital perspective. Let it be the account opening. So in the last issued circular, the regulator actually suggests that the bank can allow the online platform to gather the account opening information in advance to facilitate this account opening process. And that's where the digitalization would kick in. And also for the later on the investment, like what kind of product to invest in, the bank should already have the well-built app or the e-banking to facilitate the investment or the the fund transfer perspective of this WMC. And this is actually aligned with the expectation of the regulator. They do have a bit of 5-year plan to get the banks or the financial institution to be more advanced to adopt this kind of technology or digitalization.
Perfect. Thanks, Marina. And as we have now another 10 minutes to go on the dot, so let's, as promised, go on the ever incoming questions from the audience. And what we have here, the first one I will take, is there any slides for this talk? So as we like to have a interactive kind of conversation rather than presenting slides, so we don't have slides here, but we intend to, as a follow-up, to share some slides, and I guess they're mainly driven or interested on the various numbers that Thomas mentioned at the beginning. So you have all this insight. So we will subsequently share with you some slides with some insights on what we were talking right now. Then let's go. Here is one for Marina, even directly addressed to you. What, please, are the key regulatory pain points on the WMC and therefore opportunities for innovation in the RegTech? Thank you.
Thank you for the question. So I believe the regulatory pain points put into this WMC context would not make it dramatically different than we have currently. So we have, the KYC for AML, for account opening. We have the pre-trade suitability check. We have the market surveillance for the communication in between client and, the frontline staff, etc., etc. So those kind of, I would call it internal process. We need to consider whether it can fit for this WMC purpose. To make it more plain, it's like if the language, the Chinese language, if those solutions already in place in the bank can accommodate for the Chinese language, and at least in the Greater Bay Area, we have Cantonese and Mandarin. And the second factor is actually the customer group. So we have different systems to verify the customer ID, how to link up with the police system. That is in mainland China. In Hong Kong, we have for example, iSmart platform. So how to integrate this kind of different system into just one operating model is the main challenge, I would say, for this WMC reg aspect.
Perfect. Thanks, Marina. And here I think I have one for Andreas. Will it just be funds on the WMC or bonds, stocks, etc.?
Yeah, thanks, Mario. Yeah, so in the phase one, it is limited southbound investments to funds, which are non-complex and which have a risk rating of low to medium. Also, one important factor there is that the funds need to be domiciled in Hong Kong and they need to be authorized by SFC. So that's quite a limitation, I believe. So there's roughly 800 funds which are authorized by SFC. But if you exclude ETFs, etc., then it's trimmed down to roughly 60 to 80 funds which are likely to be in scope for WMC. And that is these. Actually, just looking at the current fund flows in Hong Kong, the majority of investments go into UCITS funds, which are European domiciled, and many of these funds which are authorized by SFC and which are in scope for WMC, they are actually investing also in mainland China. But so that's a bit of a conflict in our view. Because most of the GBA customers, they would likely be interested in investing rather in global investments. Because just looking at the expected returns, they would have higher expected returns in mainland rather than globally, but they would want to use this WMC connection for diversification purposes rather. So that's it for funds. Similarly for bonds, non-complex, low to medium risk, and lastly, they are also allowed to do some deposits with foreign currencies. And northbound, it's very similar. So it's low to medium risk products, which are R1, R2, R3 according to Chinese classifications. So in short, we do believe that probably with an expanded product scope, it will become more interesting for mainland customers. Also, once equities get added to the product scope, because we know very well that this is one of the product types that Asian clients are heavily interested in. And then we would need to also be able to combine that with appropriate research content from the banks.
Perfect. Thanks, Andreas. Wow, a couple of questions addressed to Thomas. So, Thomas, what will the bank's keys to success be in GBA?
Key to success, that's a big question. And we all want to try to answer. Let me try to
The
see
crystal ball.
The crystal ball, yes. I think, and Andreas earlier also touched on a very good point, is that a lot of the focus, I think, would be around front office. Client engagement, as well as how we actually service a customer, I think being such a large and vast population, as well as coverage in terms of land coverage. I think from customer engagement perspective, right, I think traditionally Hong Kong are very focused around servicing customers around segments. And then, rather than kind of their personal preferences and needs. And I think when we think about designing the client engagement, the customer engagement, we need to kind of focus around how do we start becoming more client-centric? As mainland customers, they are a bit more demanding, want to be more personal. So can we take a bit more, let's say, into digital empathy, or let's say more persona-based in terms of how we target them, in terms of building our solutions around or extending solutions in the e-banking or some of the portals that they have. And Jerry also touched a good point is we're going to have a lot of product coming through. Initially, maybe a couple hundred, but as we grow, we could get into the thousands or tens and thousands, right? It's also how to actually help customers get personalized content and insight into these products. I think this is also very important. And then I think another point is around investor education. Is how do we actually leverage digital technology to kind of educate these people without having to actually walk into the branch or simply just looking at web pages or leaflets to get information, right? And then lastly, I think really to be successful, we need to kind of think about, is the digital only angle, mobile only angle is the only way to go, or should we actually blend it with a bit of hybrid approach where, remotely, possibly maybe using remote collaboration or communication tools to allow the RM and the customer to engage in conversation, right? Without having to physically get at the branch being one is cross the border, second is in a COVID situation. I think these are something to think about. To be able to be successful within the GBA WMC.
Perfect. And I think you have just hit a few other questions. The culture question on difference between GBA clients and Hong Kong clients. I think you covered that one. Then how do investor behavior demands differ north, south? I guess you kind of covered that one as well. And you covered all of them. And interesting, another one, what are the key factors for building wealth management business platform? So I guess that's one you have addressed as well, right?
Maybe, Mario, if I can just add on.
Sure,
I think really the key goal that I believe banks are trying to achieve with this phase one implementation is to grab market share in terms of number of accounts that they can get opened with their respective bank, because every GBA customer is only allowed to open one bank account in this scheme. They cannot have multiple bank accounts. So you can see that all of the participating banks, they are going to offer promotions. They are going to offer incentives, cash vouchers, cashback. I don't know, anything to get customers to open accounts with them. Probably from a commercial standpoint, just looking at the current scope, phase one, it's probably not that attractive yet. But if you can get bank accounts opened today, and they are going to expand it to additional products, additional limits, higher limits, plus then also maybe advisory services, that's when you can benefit from these accounts which have been opened, and you can probably then also benefit from integrating your private wealth management business into that service offering. So that's in my view, probably the main goal of what banks are trying to achieve with this phase one, and how they can set themselves up for success in the future.
Thanks a lot, Andreas. So unfortunately, the time is up now, and we still have quite a bit of questions that come through. So we intended to actually start like a mini series. So soon we come back with a next round on deep dive on the WMC opportunity, and we either then address the outstanding question there, or we will address them in our follow-up conversation or communication towards you. So thank you all, panelists, for all your wisdom and insights. And I thank also to all the participants in joining us today. And we hope that you found the discussion valuable, and look forward to welcoming you to more of the APAC WealthTech talks in the near future. On this note, I wish everybody a great afternoon. Stay safe. Take care. Bye-bye.
Thank you.
Bye-bye.